Yo, what is up, guys? Camilo here. I hope you're all well. So, happy Friday, happy end of your trading week. Okay, if you're new to the channel, subscribe, click on the like button, hit that bell notification so you'll be notified when we upload these videos. Okay, so all this week we've been outlining the 50-day simple moving average. Okay, ever since we rolled over here on August the 16th high. Okay, we thought that perhaps it was time to deliver to you guys an alternate count where it indicates or suggests that a top has already been reached in the S&P, or maybe just we have a little bit more to go, but eventually or essentially it says that we are about to roll over, right? And why is that different than any of the other tops? And the fact that we pulled back is because of everything that's been happening so far in the world. Okay, there's a lot of things going on that are putting a little bit of pressure in the market, especially the taper talks that the Fed are suggesting or letting us know that potentially towards the end of the year they're going to start implementing. Okay, so that is a little bit of a spook situation. So why is different now? We've been noting that the 50-day simple moving average should be acting as support, and that should be our line in the sand for the bulls to defend. So far, it's been doing exactly as we've been talking. Now, taking you guys down to the 1 hour time frame where we are going to dissect and review our wave counts here. Okay, so from the July 19th flow, we have 5 waves up into the wave 1 here. Now, the way we're looking at this, guys, is in 2 ways. We have 2 interpretations. Interpretation number 1, let me hide this for you guys here. Interpretation number 1 is that wave 2 is still ongoing. And how would this wave count or labeling look like? Let me show you. So down in A, okay, up in B, down in C. Let's work on some fib zones, some fib levels here, and then let's analyze this for a second. So before I do that, look, all right, we see the 50-day simple moving average on the 1 hour time frame acting as resistance. Okay, we try to attempt to break above it here, and here. Okay, for 4 hours we're just hovering, or we broke above it but then failed to hold those levels. All right, we also have the previous highs here, okay, acting as resistance, as clear price action resistance, support here, now is resistance here. Now let's take our fib extensions and we take it from the high to the low, and we're going to do some work here. Okay, we're going to turn on the 50, 618, and the 786, which are popular levels for a wave B pullback. Now, as you can see here, the 618 and the 786 are acting as resistance. We're sandwiched between those two zones. We're sandwiched between, or actually below, the 50-day simple moving average. We are below the support lines here, or resistance lines here rather. Okay, so that is actually telling me that perhaps if we cannot break above it coming into next week, then we may see further downside. Now, here's the tricky part. Okay, we already not anticipated rather, but let me take this back. We've already positioned ourselves here on trending waves, okay, in the Discord group, position ourselves in some option calls to take us on the upside. I think we played those back in on Wednesday. Okay, so we're in the profits right now, and we're looking for a double. We're looking this to head on higher. Now, what would that scenario look like that will work well with our trade? So wave 2 has ended. Okay, we see here an A, B, and C down. Okay, let me fix this for you guys. And now what that would look like for an impulsive structure is that, let me zoom in here to have a little bit more clarity, is that we have wave 1, wave 2, wave 3, 4, and 5. Okay, let me fix this for a second. Let me turn this into a sub-minuet. Now, if you've been watching these videos, right, you'll know what I'm about to do next and where we will invalidate this count. Okay, I'll give you a second to think about it. Now, where we would invalidate this count is at the high if wave 4 passes below or passes at the at the extreme of wave 1. All right, so that will look something like this. Obviously 1, 2, 3, and then if we cross below this line, I'm just going to arbitrarily draw there. Okay, if we cross below it, then this wave count is invalid, and therefore we will go back into our interpretation that this is still an ongoing wave B. Sorry, wave 2. My apologies. So where are we in this whole structure? Are we almost, what's the percentage? Let's say, for instance, is it 50%, 50-50? Is it 70-30? What is it? So let's take a look. One way that I like to find out is that if the wave 3 has already breached the 100% extension, and there you go. So 100% extension has been breached of the wave Wave 3 does confirming an impulsive structure here. Okay, now I say I'm labeling or assigning this a 70-30, right? 70% that this is an impulsive structure and we're heading on higher, and 30% that we're still going to hit resistance and turn over. Okay, now if that's the case, again, we shall know relatively soon. So what are those levels? Let's take our fib retracement tool and let's take it to the high. Theoretically speaking, if that was to be the end of it, right? And our targets here should be the 23 and the 38. Now, the 38, as you can see, does not go below the wave 1. So that gives me a little bit more confirmation that this is perhaps what we're looking for. Because if the 38% were to fall below the wave 1, then perhaps, this isn't really what we're looking for. But, this is here. So these levels that we should be looking for coming into next week are rather 442.23 and 441.32. Okay, so once we find support, or perhaps we just head on higher. But if we keep on heading on higher, it's even better because these zones then keep on pushing further up. But for now, we're going to call this our zone for our next trade, okay, to take advantage for the upside trade to the wave 5. All right, guys, so I hope that this whole little structure here is clear coming into next week. These two zones are critical for us to watch. If we can break above the previous highs, not the previous highs, the fib levels that I noted prior to doing these, then consider the fact that wave 2 is still ongoing. Okay, I'm going to turn off these labels and go on to the daily time frame. Remember, we're still looking, actually, let me turn on those labels again so that you can see. Okay, we're still looking for a wave 3 to head on higher in the primary degree in this interpretation. Okay, this count still suggesting further upside. All right, now over to the Qs, down to the 1 hour time frame. The Qs are displaying a bit of an impulsive structure as well. So the way we are looking at this, guys, is that wave 3 ended here on July the 23 high. A, B, wave C completed at the 1272 extension of wave A versus wave B, found support. Now we're going up in 1, down in 2, 3. As you can see here, we've already broke above the 50-day simple moving average. We broke above the 200-day, and now we should be heading on higher in the wave 3. Okay, now let's confirm, like we did in the SPY, where those levels are. If this is in fact the wave 3, then we should actually look. We are not there yet. We're finding resistance at the 100% extension, but we've already reached it, right? This whole impulsive structure here is 100% extension of this wave 1. So it's giving me a little bit of more confirmation. Perhaps coming into next week, we head on higher, and what those levels for support will be are the following. So assuming that wave 3 ends here, okay, wave 4 zones should come in anywhere between the 23.6, 38.2, 366, and 365. Okay, this is still well above the origin of the extreme of wave 1. All right, over to the SMH, guys. The SMH is looking less attractive for now. So out of the wave B, down in 1, up in 2, down in 3, up in 4, we haven't surpassed. I mean, wave count invalidation comes if we go beyond this wave 1. Okay, for now, we're looking at this as wave 4, and we have a little bit more overload left. Now, if this is not the case, then perhaps wave C has already completed here. Okay, let me delete this. Wave C completes there. Wave 2 completes here at the 38.2% retracement, and we have another upside target. So now you see, guys, there are instances here where we have to look at all the other indices or ETFs, all right, in other markets to understand if there's still some juice left in the market for upside targets. IWM found support at the 78.6, almost invalidating our wave 4. Okay, so now if we went below of the wave 4 here, then wave 4 is not complete and wave 4 is still ongoing. But for now, we're considering the fact that this is down in A, up in B, down in C, and we see more upside. So 212 and 215 were support. Right now is acting as support. We gotta watch the 100, the 50-day, the 200, and further to consider further upside trades and small caps. All right, guys. So, SPY is looking good. SPY, so far we're anticipating further upside. We're gonna wait and see what happens coming into Monday and Tuesday to consider additional trades. All right, guys. So that was it for me today. I hope you guys had a good one. I want you guys to enjoy the weekend. All right, Monday is a new trading session, trading week, great opportunities to come. Join Trending Waves. You'll see what the service is about. We want to see more people, new faces, so that everybody can take advantage of what we're doing in there. All right, guys, as always, I appreciate you. Have a great weekend. See you guys on Monday. Bye bye.